Wouldn't it just? AHT, the headline of the day. And as we crack the $10 area on this again, can we look back and think at the headline of the show when the show went live? Was that the time to be buying that particular asset? And have we got a big F-off rise coming up as a result of this F-off drop? Right, okay, so much like the intrepid teenage lad or whatever, I don't know, teenage, shush, that seems a bit late, whose balls have dropped. He's now looking to his bright future ahead of him. And I'm going to just rechange up a dupples this here thing to show you in terms of the numbers, right? Looking at this one, if I just change this over to green. Green, is green good? Green visible? I'll make it a yellowy, kind of a yellowy, sort of crappy yellow color, right? And then make the rest of these ones blue. What I'm doing right now is I am making these things so that they are more visible compared to the ones that are below them, right? And you can now see that there's several lines up above. The top one there, the top one there, that's the 1618 Fibonacci retracement. It's up there at 1240. Here is the 112. Here's the 113. Here's the 100%. Looking back there, yeah. So the golden line here, there's a 100% retrace. If we're to kind of retrace all the way back up from essentially where we were, like, you know, just yesterday, really is what it feels like. The truth is, it wasn't just yesterday, it was Friday. Yesterday was also a negative day for us as the SEC probe was coming into an end, and really this was an opportunity in so many ways to get liquidity. You know, what's happened in this period of time is there's been this big chunk of volume just in here, and you kind of wonder where all of that's come from, and if there was people who were then speculating in this zone just here, could things go towards the top side? Will it go long? Sorry, in this zone just here, speculating here, and then managing risk somewhere in this zone down here, and just thinking, you know, if there was sharks looking out there in the world for stuff to happen. There's a shark in there. Give it an eye, you know, so you can see it's a shark, right? So do we want to give the shark little wings like a plane? Whee! So there we go. There's a shark, right? And if those sharks were looking to nom things up, they'd be looking in around there. But they're obviously themselves, you know, kind of going to have to be aware of their own sort of limitations, right? Because there ain't no such thing as magic in the world. And that 10-10 cowboy time is, of course, the absolute the pivot on this one. So cowboy time, you know what cowboy time is? It's not. It was actually, I suppose it's cowboy time, the region of cowboy time of 980 or 990 to 1010 itself is it 1010 1010, and then of course as well 10 to 10. So 10 to the 10 to the 10 10 10 10 to the 10 to the 10 10 10. Cowboy time on this one is what we're actually looking at in terms of whether or not we've got any sort of potential for follow through to get outside of this zone. If we did, then it would look like a really big kind of you know, momentous recovery, right? But this is very early days, and in terms of the move that's happened so far since like the kind of the start of the show up to where we are now, it's a nice solid couple of percent. And you know, managing that there, even just with a trailing stop or whatever that had a 1% on it or something, we put you, I'm not financial advice, I'm not financial advice, we put you in a position where you've got the freedom to be able to do something like, you know, go off and talk to your friends out there in the world about what's happening without having to worry too much about managing your position sort of we the bed style. So you know, that's kind of like, so you know, whether this goes up or down at this point, it's kind of anybody's guess, right? You could say that. So if it's going to be anybody's guess, then shall we chip in and have one of our own guesses, I suppose, then ourselves. Now, I'm not a financial advisor, and there's financial advice, of course, so don't be treating it like it is. Is that a mushroom? No, it's an arrow. It's an attempted arrow I drew on the charts just there. In fact, can you see the shark? We need to make sure you can see it. Yes, you can. Here it is here. And here's the cowboy time explanation. So could we see this happen? Well, we've got a couple of reasons to look to it. One of which, of course, is just where this lows come in at in relation to our previous lows, and then that's pretty decent. And we also know then, if we do have a movement towards the top side, that the range, the elasticity on this thing, if you've got like sort of rubber band, and the rubber band on it can like be pushed out, you know, either way, to be bigger and whatever, you do get to a certain point where that rubber band will break, and the thing will fall apart. Up between these two areas, where it breaks and where it isn't, that range of movement is called the elasticity. And then exactly the same thing is what exists inside stocks and shares and commodities and any other word that you want to put on anything at all in the world, any sort of financial instrument. So anything you can apply a price to has got the same effect with it. And there's price elasticity. It's the same thing affects the cost of the Snickers at your local shop there. It's the same thing, exactly the same. And because of course within price elasticity is how you can find how price and demand measure up. So imagine you're a company and you sold freaking what, let me think, cups of coffee, right? Cups of coffee, and you had a cafe, and all you were able to do with your cafe was to be able to sell cups of coffee to just the people that walked by, and there was enough and attractive enough proposition so that from everybody that walked by, they think, I'll go in there and I'll get a coffee based purely off of the price of it alone. That's it. Like, so they walk past and somebody sees a sign that says $2 for a cup of coffee. They think, oh, that's too much for me. Somebody else comes along and they think $2 for a cup of coffee. Oh, that's great. I would have paid $2.20. And overall, the simple concept of economics is that you put a sign outside your shop, you put a price on it, and the maximum way to make money then is to get the best price point where the most people walking by there will choose to buy that at that price, etc., and so on. And that's kind of just basic economics and trying to maximize that. Well, how do you maximize that? Well, there actually is a very well worked economic concept for doing that, and it's not really spoken about in this way very often, but this is the principle of it. I mean, this is essentially what you should infer for if you were to be studying like business and economics at the same time. These are the inferences that you're supposed to be able to generate if you're going to then go on to become a successful person. And that is that elasticity of price is obviously the measure to which you can move price before all your customers basically tell you to piss off, right, etc., and stuff like that. So elasticity of price then is expressed on charts with regards to the movement that we've had. So if we were then to take this here movement down the way and say that we could speculate towards the top side that we would get this much movement or so again, then we can do that using simple tools like drawing in here. So if I just draw in this and we're just say, well, let's just say that we did 100% of that all over again from the point at which we were at our high, that would take us up towards all the way up towards the towards being able to say, hey, look, we're trending up the way, because you'll be able to look from where we got our flash down towards the lows. We'll come in here and say, lo and behold, there's your 113. So if we can just push on past that just a little bit, just get that full thing and a wee touch more, then we're trending up the way. Well, think about it, right? If I were to say to you that let's go a wee bit more and then a wee bit more up the way, then there's a trend there. There's a potential for a trend. Why is that? Well, it's because it's moved beyond the range of the previous amount. So you're charging $2 for that cup of coffee and 100 people are walking through the door. Suddenly you're charging $4 for a cup of coffee and 100 people are walking through the door. You know what? Actually, 110 people walk through the door one day, and when you're charging the $4 a coffee, then you can think to yourself, well, hey, look, maybe there's a way of getting 150, 160 people to come through if instead of charging $4, I charge $3.90 or $3.75, right? So you think that because you've just gone up to that amount. So the next week you put on the sign, it says $3.75 for a cup of coffee, and then walk through the door 150 people, and you're thinking, sure, everyone that comes through I make slightly less money off of, but at the same time there's more of them coming through. So then your business is a success, it's growing, and you've done that by taking the price elasticity. You thought, well, everybody would F off at this thing, and just tested it and seen what happened, and then saw that there was, well, actually say you had 100 customers first, it went down to 70 customers. You're thinking, shit, well, there's more money overall here, let's drop it back down to 375 and see if we can get back to 100 customers again, but with a higher price regime. And then in that sense, then you can of course do the same thing over and over and over. And that's the basic premise of business, and that's the basic premise of understanding everything that you've ever paid for in your entire life and the reason why you're paying that amount that you're paying for it. There's two basic principles in economics. It's this, which I've just discussed in a way which is accessible, I think, and is really only really kind of, after years of studying it, do you talk about these things, understand them that way. But now it's suddenly accessible to everybody. And I think it should be well understood from that little example there. Then there's the other way of doing business, where you simply say, this is how much it costs to do this, and we're going to add this much more on. Now, this is the timeless, going back for millennia. There's these two ways of doing business. So, it costs you essentially, once you've put all of the mathematics into the formula, you can say to dig out beans from the ground or whatever, it costs 1 pence per bean. So if you want to buy beans from me, it's going to cost you 100% more than it costs me. That principle, and you just kind of go on that. That's called cost plus, right? And then you've got, and really, essentially, once you've done that once, you're then operating in the second principle. And the second principle is called economics, right? And it's how the world works. So any company that comes along that's just launching one for the first time might think about it in one of two ways, right? How they're going to go about it. Every single company ever that's ever existed, and therefore every product you've ever paid for, actually exists on the second side of that. Actually does, right? You know, it actually does. There isn't any sort of cost plus thing in there with that. Right, so now that we understand economics, cool, excellent, and we understand the ranges, then we understand that why that would make that into a bullish trend. That's cool. We've got that completely. Why did I do that? That was a lesson that wasn't necessary, right? It wasn't necessary. But then say it wasn't necessary. Sorry, I don't need to teach everybody economics, and I apologize to anybody that feels that that type of lesson is delivered in an overbearing format. Really, to be perfectly honest, you know, don't need to be like that. But say you were to go in and doing an 886 Fibonacci retracement, that'd obviously take you up beyond that sort of region as well. I've not got those two measuring sticks lined up perfectly. Say you're to be doing a 786 retracement above the area, you know, why would that make sense, etc., and so on and so forth. We can see that that takes us precisely to where the flash is, to the penny. So regardless of whether or not anybody even knows about the founding principles behind this indicator or anything else, you can see that from a purely algorithmic based trader opportunity thing, that you could be looking up towards that target. There could be harmonics, etc., that bleed in with this sort of thing, etc., and you can see that it works out perfectly with regards to the 786. Now, if you see you were to take a 618 retracement, the golden pocket retracement distance, like what that distance would be, just that's that worth of the movement, it did that much above where the previous high was, then that would obviously take you up to where that 1618 Fibonacci retracement is, and that's why you can see that these measuring sticks are lined up like that, and why I colored those things in like that. So why would we be looking towards that at all? Well, if we can actually get a turnaround here, where this operates as a low within the overall structure of this, you know, this range at the downside here, we've been able to stay above this zone, really, largely speaking, since we broke back up above it again on the 3rd of January at the start of the year, and are now back down there again. So it's a support and resistance area, pivot from before. So there's reasons for that, and we've just, like, you know, just seen the kind of little changes happen with this 236. That's a start of something, enough to give a signal out there to the world for enough other traders to want to speculate off the back of it. So can we see a cascade of that at a point whenever the volume in here all operated within this range and we weren't able to push out beyond it? And we talk about increase in volume, etc. This increase in volume is increase in volume within the range, confirming that this is indeed where the prices are, as displayed by the VPVR on the right, at which point we're at the very low end of that range. So this increase in volume, despite being, you know, what could be conceivably during a downward movement, and thus trick somebody into thinking that that's how that would work, indeed is actually just increase in volume within the range, defining more definitively that this is where things are considered to be, at least, you know, worth it in some ways to have it for one way or another. And beyond that, it isn't the case. If you're to see increase in volume beyond that zone, then maybe you're talking about a different type of regime again, given this all of the kind of discussions that we've had about this whole movement line up with regards to to everything that we've talked about before. If I just take that movement over there and pop it into somewhere like over here, you can see that this has been the expression of where we've been this entire time. So as you can see, that's just the same as before. So movements down beyond that could perhaps lead to other things, and see things coming down towards these targets, like where the thing that I had previously drawn over the volume and has moved as a result of me moving the charts now appears at, right? That's pretty extensive. So we're doing pretty extensive stuff there. So we've covered everything with regards to within the range and briefly, but we're using Fibonacci here with regards to what could happen with extensions outside of this current range just here. Bear in mind that doesn't take into account the previous range, right? So if we are talking about this as being a regime where things can change, and you understand now that I show all this extra information, I hope you would get a bigger picture, that if I were to take take something as simple as a big old feck off box here and just draw it around it and lift this thing up here and just slap it over here, what do you see? I mean, this is the concept in terms of the elasticity. So what you've got here is a man selling coffee, right? And his coffee cups over here, he was saying he's selling coffee, but this is obviously a downward moving chart. So I'm going to continue using a positive sounding analogy, you know, in terms of increasing prices, just to allow you to, with the least friction, understand what I'm talking about. But obviously, for anybody who is paying attention, this is obviously a downward moving chart, and therefore this analogy kind of struggles in terms of, you know, to talk about increasing prices. But here's a man over here selling coffee at $2 per cup, you know, and he's got all of these customers. And then what he's done is he said to himself, well, what's the elasticity of my coffee? It's around about this. And then he's flung it down the way here, and he says to himself, well, I'll start charging $4 per cup, you know, or whatever, essentially, and see how people respond, and all so on and so forth. And then we've come in here and we've seen, well, look, you know, this is basically the same businesses, which is why, of course, Starbucks and, of course, a decent, you know, a decent coffee company, so to speak, can exist on the same street with radically different pricing because of, you know, little things to do with things like marketing and whatever else, you know, that go along with it. So that's how business works. So now you understand business and you understand economics under its two main principal things. Like business, the act of business is the instruction of economics on your activities. If you understand economics, then the simple act of conducting business is allowing yourself to be instructed by economics. Therefore, the business is this outcome from economics, and this is the gift that Adam Smith gave to the world, essentially. And this is and we can see this very clearly in the chart. So obviously I was using an analogy here where the man increased his price of coffee, but is actually a decrease in the price of coffee to bring us down here. So just to continue this on the way and then allow us to kind of transform that into a sort of a lesson, if we were to just look at this instead of what I was saying before, instead of retrospectively, and look back the way and say, well, hey, look, there you have it. There's your $4 cups of coffee, right? And here's your $2 cups of coffee. And what we can see here is that while he was doing the, you know, that for some reason coffee prices had to drop there, right? But what we want to see is that the prices get to go back into that 4-cup area, and for everybody to be able to continue to enjoy and purchase it at that price. Or of course what you could be looking at is this movement that would take you down to this area. This is why, of course, cowboy time is so very, very important, and we're in that cowboy time right here, right now. So giddy up prices, hi ho, silver lightning, and if you're looking for then a silver lining, then of course there you have all of them on the charts for us where we are right now. So with that all in mind, it's time that we take a look at some of the fundamentals of this company, right? First off, here's a company which has got at least by the looks of it, I think $500 million in terms of headroom cash wise, when at the worst period during COVID it was losing what was it losing? I can't remember what it was losing, but it got at least, in terms of cash reserves, at least enough money to survive. I thought when I was looking at it I can't give a financial that sounds, when you start talking this sort of shite, it sounds way more like financial advice. Look, they had some money, right? They weren't going to go bust, and you could look at it that way. Then they've managed to renegotiate their outgoings on that front and get better terms on all of their debt as well in this low debt environment. They've done well on that front. They've also upgraded and completed a major investment process in a series of hotels with specific ideas in mind for capturing the different areas of the market that they're going to see growth in over the next couple of years, namely in the business sector and to do with domestic American holidays, looking towards the southern coasts on the east there, with regards to their hotel offerings, I think, right? Whatever. You've also got who cares about all that, right? But there you have it. There's that. And then you've also got these things, right? So you've got the news. And there's this there: Ashford Hospitality Trust, Braemar Hotel and Resorts. Ashford say SEC has ended the probe. So the US Securities and Exchange Commission has ended its investigation into Ashford Hospitality Trust, Braemar Hotels and Ashford Hospitality Trust. And Ashford. See, this is Ashford, not Ashford Hospitality Trust, but this is actually Ashford Hospitality Trust. So you never know. MT Newswires getting your little kind of letters all mixed up and getting a bit confused, whatever. You always have to forgive the news people, because the news people, they don't know anything. For transactions among them dating back to 2018. So this is something that's hung over them during a period of downward price action. So it's good to see that this was a feature of the components that you would understand about the company during its bear market. Where you would say there's problems here, and it's moving towards the downside off the back of and this isn't helping the story, right? So there is ended anyway. So that's ended. So that was that. And then there was this one here, Ashford Hospitality. This was on the 7th of January, so it was a week ago and whatever. So hey, 10 days. Ashford Hospitality said late Thursday its revenue per available room rose 170% year over year to $83 in December. Preliminary portfolio occupancy in the month was 56%, with an average daily rate of roughly $149. So this is during the unicorn happenings in the world, and we can see that there was an average daily portfolio occupancy was 56%. Like 56% occupancy during a time when it's crap. And they're making 170% more year over year, which is good. And one of the triggers for them wasn't necessarily just that they fancy changing the price of coffee. It was that their business has had this whole process happen to them. This is one of the, again, that when people talk about the health of an economy, and why, so like you've got Mark Cohedes, for example, recently got well known amongst a lot of people in the sort of the GME world. Of course, he was well known 20 years ago, etc., whenever he was wiped out during 13 years ago during the 2008 financial crisis, when Goldman refused him access to his liquidity, which was there, and chose to, the shit rolls downhill thing, and his short hedge fund, or hedge fund at the time, or whatever they wanted to call it, was wiped out. Hard to believe it'd be a short hedge fund that was wiped out in bearish market conditions, so I'm just going to say hedge fund. But of course he believes and proselytizes, actually, in fact, about this, preaches on it, about the kind of the need in markets to have this to have people shorting in order to kind of root out the bad guy. And whenever you put kind of pants on the outside and tights on underneath, it does start to feel a little bit like, after a couple of years, and I'm surprised that the Marvel movies are still the most popular movies in the world, it does start to look eventually a little bit like, you might be a superhero, but you're choosing kind of the wrong kind of way to address and present yourself, right? You might be a superhero, but that's not necessarily it. If that's how you're going to talk about things, instead it's more like to do with the function in the economy and of shorting is to do things where it's to do with kind of like that opening up your knee after a cruciate ligament injury and scraping away the junk and then putting it back together again, sort of rankness. That's what they're for, to kind of put downside pressure on companies which have got value plays to be had towards the downside, because they're offering not as good value as they really should be, which can then trigger, or they're not performing as good as they should be, when we understand already that the methods of any functioning economy is really the interaction of economics on the business environment, and this is an expression of that, perhaps humanity's most beautiful expression of that since of all time. And that is actually what the likes of Cohedes and etc. should be saying, because we all know that the very, very truth of it is that it's the responsibility of bodies such as the SEC, who were doing an investigation into companies such as Ashford Hospitality Trust, to actually be the ones that go ahead and punish the ones that are doing badly in markets and stuff, and that Mark O'Heady often profits off of the hopes and dreams of others who of course suffer. So it's like we can't really herald the good work of the likes of Burry during the 2007-8 financial crisis, which led to millions of people having their lives ruined because they were able to massively profit personally off the back of the destruction of the hopes and dreams of the average individual in order to shine a light on problems that existed within the economy, which were really the food fiduciary the duty of the bodies which actually govern the economies, etc. And it's good to have a hands-off economy and let free markets reign. But the idea then that you would do that to such an extent that you would outsource it to the likes of a short hedge fund, which makes speculative, which takes such incredibly speculative positions based off of positions which are obviously so unprovable to be not further processed by the legislators, that there's obviously a deficit in the framework of that economy, where that onus falls squarely and purely on the likes of a short hedge fund, and that therefore does not represent the raison d'etre for them. And actually the raison d'etre for them is precisely this, because what it does in the end is it makes a hotel be able to say, we need to charge something else for our rooms, and we need to do this in a way, we need to take it so that we close down the east wing, we make the west wing of the hotel stay open, and we make all of the rooms inside the east wing get to be twice as good quality as the ones in the west wing, and we open it back up in 6 months. And we do that, and we shove everybody onto that side, and what we do is we charge them an extra $25 per head, because this is what we need to do to be able to survive as a business, because these are what our value really is being represented as result in the economy. And that is what an economy is for, and why you're able to then sell things. But the likes of being able to go out there and proactively and synthetically short a company off the back of something is egregiously wrong. But anyway, that's it. So that's the end of that. That's everything in here. And there was a donation that came in. It was from Gerardo Spatuzzi, who donated $5. Could you take a look at LRC? Are there any opportunities to buy under $1? Great question coming in from our man in the charts over there. And we'll get over to looking at it in just a couple of minutes. We can take a look here and see that Ashford Hospitality's shares rise after Q3 net loss, adjusted FFO gain beat expectations, and this is to do with the earnings report that was over here in the past. Now, they were better than expected. The reported was a few cents, 6 cents less than what we thought would be, as their sort of standardized earnings per share, and that was a good thing. Okay, that was a good thing because you're talking about the health of this business here over the longer period of time. This is the worst time of the year, etc. Running into this. Now, that was coming into late November, coming into late October, and as we can see that the results are looking like that they could also be good again. Come the next one, in terms of there would be a loss. There's going to be a loss. Yes, there is, but that company has money to lose, and it's that money to lose is what's affecting the value in the company, as opposed to the share price here, which is a representation of that value. So the conditions and the speculative value is a real thing, and then the conditions in the market changing to be just a net positive overall means that absolutely you can go ahead and lose money as you're running a company with the knowledge that your $2 cups of coffee can turn into $4 cups of coffee with just the right impetus in the market. And that's what we're looking at then with regards to how we could go forward, making this into a nice final low area for us, if that was it, if that's it. But it is what it is until it is what it isn't. This is a downward trend, which means that this the magic wand that I've got floating around here is very likely to be the next result. I mean, the trend would suggest that that is going to be the next result for us, but there are other things to look to, and they get quite crazy. And there's a flash up here in the 30-minute time frame up there when it the equivalent. This is before the post split. There's a stock split here. This is pre-split. It would have been up at the equivalent of $59 at current sort of share prices, etc. So there are things to happen here in terms of what the value in this company is. And when we think back to what it was during any of these phases in the markets, when it was obviously much higher than it is now, then we know that it was that it was based on like its holdings, etc. So there's your fundamentals and everything on that one. Let's just broaden things out and appeal to a bigger sort of audience, I guess, overall. So earnings reaction history. This was obviously quite a while ago. It came in October. This part of news, this old piece of news here. Ashford Hospitality is due to issue its quarterly earnings report in the upcoming extended hours session. Given its history, traders can expect light trading in the issue. Blah 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 blah. Over the prior 3 fiscal years, where the shares of AHT rose in extended hours session reaction due to its earnings earnings announcement. History shows that 50% of the time, two events, the stock posted additional gains the following regular session, about 50%. You know, so at the minute, in terms of like its history, like you're looking at it saying, well, 50% of the time that there's anything on the go here with this company, it's freaking tanks anyway. So it's got nothing to do with the earnings. Here we had the earnings coming in, it tanked anyway. You know, that was a 50-50 thing to happen regardless of the earnings. So like, you're just looking back at the thing and saying, well, is there a chance on this one? And there certainly is. And the price then obviously asking questions in it, the cowboy time. LRC USDT over here. If anybody wants to take a look at anything else, then do please go ahead and ask. Current prices on this at